Hello everyone. Welcome back to Wealth Maama. Today's market started with a positive tone but slowly slipped into weakness, and Nifty ended the session in the red. The movement looked calm on the surface, but there were some very interesting shifts in sector behavior and stock level rotation that tell us a lot about where the market wants to go next. Let's break down today's Nifty action. The market movement, global and domestic cues, the top gainers and losers with reasons, sector-wise performance, India VIX, support and resistance levels, and finally tomorrow's prediction. Let's get started. Nifty began the day on a cautious note but with a positive tilt. The index opened at 25,998.50, up from yesterday's close of 25,959.50. Early buying pushed Nifty to a short-lived intraday high of 26,032.60, giving hope of a recovery. But sellers reappeared and the market drifted lower through the afternoon. By the close, Nifty finished at 25,884.80, down by 74.70 points or minus 0.29%. The intraday low was 25,857.50. If you look at the intraday chart, the pattern is clear. A morning push, midday consolidation, and then a late-day drop. That late weakness is important. It shows traders were unwilling to hold aggressive longs into the close. Why did the market fall today? Let's talk about the triggers behind the fall. Global markets were mixed. US futures were range-bound, Asian markets were flat, and commodity-linked markets were under pressure due to weak global demand indicators. Just like yesterday, there wasn't any major global shock, but there was no strong positive trigger either. Domestically, two things mattered today. Profit booking. After yesterday's wide selling in heavyweights like Adani Enterprises and IT stocks, today again traders used any bounce as an opportunity to lighten positions. Sector rotation. Yesterday IT was weak, and today again the weakness continued in some of these large names. Meanwhile, metals and banks captured some flows today. This back-and-forth rotation is typical when the market is trying to find direction. Not a panic selling, but a clear lack of buying momentum at higher levels. Sector-wise performance. Let's talk about the sectors. Sectors that performed well today are: banking sector. SBI performed strongly today, reversing the mild weakness from previous days. Insurance and financial services. SBI Life continued its stability after doing well yesterday as well. Metals. Hindalco saw strong buying today after showing weakness earlier this week. Defense. Bharat Electronics Limited recovered impressively after being under pressure in previous sessions. These sectors together provided some cushion to the index. On the flip side, IT sector, Infosys, tech-heavy counters, again saw selling. Yesterday we saw the start of this profit booking and today it extended. Infrastructure and utilities. PowerGrid fell sharply. Autos. Some names like M&M continued their corrective mode. Adani Group. Adani Enterprises was one of the biggest losers today, just like yesterday's muted sentiment on the group. So leadership was missing from heavyweights, making it difficult for Nifty to sustain highs. Let's talk about winners, and why they won today, and what it means relative to prior sessions. Bharat Electronics Limited, plus 1.58%. This is a notable flip. Bharat Electronics Limited had been under pressure recently after some defense-related headlines. Today it bounced strongly. That suggests either short covering or fresh buying from value managers who saw the dip as an entry. When a name flips from negative to positive quickly, watch for follow-through next session. If it holds, it's a real rotation. If it fades, it was just profit booking clearing. Hindalco, plus 1.44%. Metals have been volatile. Hindalco's gain today indicates buyers stepping in at lower levels, possibly seeing value after the earlier weakness. If China demand indicators improve, this move can continue. SBI, plus 1.33%. Banks were mixed this week, but SBI's strength shows domestic flows into high-quality financial names. This is consistent with the DII preference for blue chips we've seen. Shriram Finance, plus 1.26%, and SBI Life, plus 0.80%. Both saw strong flows into financials and insurance. These are being treated as relatively safe yield plays in a choppy environment. Dr. Reddy, plus 0.80%, Pharma's supportive defensive buying continues. If we see on an overall level, buyers were selective and focused on quality and value plays, a sign of cautious optimism rather than broad risk appetite. Now the downside stars, and why they hurt the index. Adani Enterprises, minus 2.91%, a big move lower and a clear drag. This name often exhibits high beta, which means when weakness shows up it can amplify index moves. The volume was meaningful, so this wasn't negligible. TMPV, minus 1.59%, and Trent, minus 1.49%, retail consumer discretionary pressure. These names had been strong earlier, so some profit booking is natural. Infosys, minus 1.15%. IT had a tough patch late in the session. Earlier in the week, IT had been a leader. Today's weakness is profit-taking and sensitivity to global tech cues. If IT continues to weaken, watch the index. IT carries a large weight. PowerGrid, minus 1.14%. Infrastructure and power names were under pressure. This reflects some rotation away from utilities into other pockets. Takeaway from the top losers of Nifty. Today's losers were heavyweights with significant index weight. That explains why limited number of stocks pulled the market down more than the number of gainers lifted it up. India VIX fell, minus 0.99 points, which is minus 7.50%. This is important. A falling VIX while the index is slightly down tells us that the market is not trading based on fear. Instead, it signals calmer expectations for near-term volatility. Traders are pricing lower realized volatility and option premiums also eased. In plain language, people sold into rallies and bought dips in a controlled way, not in panic. Compare this to a couple of days ago when VIX spiked. That was fear-driven. Today's fall means that the earlier fear is subsiding and the market is returning towards normal uncertainty. That supports a calmer, range-bound outlook for tomorrow rather than a dramatic move. For tomorrow's session, following are the support and resistance levels based on the pivot points. Support 1, 25,817. This is the first line of defense. If Nifty holds above this at the open, bulls can try to stabilize. Support 2, 25,750, a deeper support. A break below this could open a drop toward 25,650 to 25,600. Resistance 1, 25,992. Nifty tested similar levels earlier today and got rejected. Clearing this would be a small bullish sign. Resistance 2, 26,100. A sustainable break above here would bring back the positive momentum we saw last week. Given where VIX is and that the selling was controlled, I expect the market to respect these levels and trade in a range between 25,750 and 26,100 tomorrow unless an overnight global shock comes in. Tomorrow's market prediction. Putting everything together, today's selective buying, VIX cooling, and the pattern of gains and losses. Here's how I'd approach for tomorrow. Most likely scenario, 60%. A range-bound session with a mild tilt to recovery. If Nifty opens above 25,817, we'll likely see attempts toward 25,992 and possibly a test of 26,100. Watch for leadership from SBI, SBI Life, and IT names. If SBI Life and SBI continue to attract flows, they can act as buyers for broader indices. Risk scenario, 30%. If Adani or other heavyweights see continued heavy selling and that selling spills into other large caps at the open, we could test 25,750 and then 25,650. Keep stop loss and trade sizes mindful. Bull trap watch, 10%. A morning pop, above 26,032 followed by intraday reversal. That's possible, given the intraday pattern we saw. Don't blindly trust early strength. confirm with volume. And for traders, use the support 25,817 as your intraday reference. Hold above it and play the bounce. For swing players, wait for a clear close above 26,100 to re-enter bigger long positions. A quick recap. Nifty tried to rally this morning but ended lower at 25,884.80. The market was driven by selective buying in insurance, banks and some cyclicals, while heavyweights like Adani and Infosys weighed. VIX cooled, which is constructive. It means the market is digesting moves and not panicking. Watch 25,817 and 25,750 as supports, and 25,992 and 26,100 on the upside. If you trade intraday, use tight risk management and watch for volume confirmation. If you're a swing investor, let the dust settle. Look for confirmation above 26,100 before deploying new capital aggressively. That's all for today's update. If you liked this breakdown, hit the like button and subscribe to Wealth Maama. And comment below which stock you want me to deep dive into tomorrow. I'll also post the levels and top movers in the pinned comment. Thanks for watching, and I'll catch you in the next one. Stay safe, trade smart.